I'm about to bust the 10 biggest myths holding people back from building wealth in real estate. And a couple of these, they might just shock you. Okay, let's start with number one here, needing 20% down. Not always. Okay, partnerships, private lenders, lots of different options to get less than 20% down. And the reality is that a 5% down program exists in large quantities. 5% down is the real number that you're going to look to get to in order to get into the real estate game. Number two, only for the rich. Access always beats money. Okay, your network is your net worth. So you don't need to be rich yourself, but you do need to get into the right circle so that you're amongst people that have money that can invest in real estate. So the right relationships always open doors more than cash itself. It's passive income. Very, very, very misguided information there if you think it's going to be a passive income approach. This is an active game. And unless you have a very, very, very great property manager in place, this is going to be much more of an active wealth building journey for yourself. Market timing, okay? Time in the market always beats timing the market. It's about time in. Okay, when you play the long game in real estate, very, very difficult to lose. If you're always looking to time the market, well, you're going to miss a lot more of those shots that you could be getting in the game otherwise and building wealth for the long term. Number five, hot markets are the best. Well, cash flow is often found in the boring markets that nobody's talking about. So it's not about the hot markets. It's about picking a market, any market, and becoming an expert in that market so that you know how to approach it and then going from there. A lot of times the most boring markets are actually the best markets. Debt is dangerous. Debt equals danger. Reality is bad debt equals danger, but good debt used appropriately equals lots of opportunity. So there is a very big difference between the types of debt that you go after. Bad debt, of course, can be dangerous. Good debt, very, very, very important to use in real estate. Flipping equals investing. Flipping is a form of speculation. Flips can be taxed a lot higher. Rentals, long-term rentals, they build wealth over decades. They make you a lot more wealth than flipping ever does. And flipping ultimately is a form of speculation. It's speculating. Don't even call it investing. It's active investing. They tax it that way for a reason as well. Flipping can be a great way to build wealth or build money reserves, cash reserves in real estate, but it's not really investing. It's speculating. Self-managing. Must self-manage yourself. Look, a great property manager is one of the greatest tools you can have in your tool belt, one of the greatest relationships to build, and it can make your investment pretty darn close to being hands-off. And so you do not need to self-manage. You always need to look for great property managers. Must buy locally. A lot of people get stuck thinking that they need to buy nearby where they can go touch it, feel it, see it. Often, I know some of the greater investors I know have actually bought far enough away because when you're buying in a different town that's not locally, it actually mitigates that temptation to get really involved yourself. And now you become much more of a passive investor faster, which is ultimately what most people really are investing for. It's not to be an active real estate investor. A lot of you are looking to invest just to make money, not to get another job. So with the right systems, you can invest anywhere. You must take action and buy, but you can buy anywhere in the world. Too risky. This is the one that we hear all the time. It's too risky. There's tenant issues. There is big money at play here, and it's too risky. Education is the antidote to fear, okay? It's never too risky. Actually, sitting on the sidelines is far more risky. Start educating yourself and then take action, and you will learn so much, so fast. Before you know it, it will not feel risky. It'll feel like a must because you have to invest in order to build wealth. You have to invest in something. Real estate is one of the greatest assets and easiest assets to understand, actually. So I highly encourage you to learn more about it, take advantage of some of these approaches, And there's 10 big real estate myths busted for you today.